Hey guys, what's going on? In this video, I'm going to break down a quick example which is incredibly important considering the market conditions right now. So a few days ago, I've been posting a bunch of videos saying how the market's going to drop, Tesla's going to drop, all that stuff is happening. Okay, however, some of you have been emailing us a lot of questions like, well, how do you actually make the money in the market? Which I thought I plainly pointed out, you got to position yourself ahead of the move. But I guess the question goes a little bit deeper, and I'm going to try to bring some light in this video about stuff that really matters as a trader, which most of the people never pay any attention to. So how do you make money in the market? If I was to summarize it, I would say this: you got to find what's not obvious to the consensus. It does not mean you always go and bet against the consensus, because as I pointed out in my last video, a lot of analysts were highly bullish on Netflix. They were highly bullish on the market. JP Morgan said that there was going to be a market rally. Well, looking at this chart, clearly it's not a market rally. The market is down. So I posted that video. By the end of today, I'm recording this on April 22nd, the market could be at 4,300, which would put that JP Morgan call completely wrong. So the question is, how do you make the money in the market? Again, it's what's not obvious to the consensus. You got to place your bet in the direction of what's not obvious to the consensus. And a lot of times, it's not going to be looking at your Greeks. It's not going to be looking at what most of the options traders want to look at. Well, I'm looking here, the alpha, the gamma, all this bullshit, guys. It's just a reflection of what has already happened. In order to beat the market, you have to look at what's coming next. Okay, so a lot of times you're going to be focusing on opportunity. As a trader, you almost have to be an investigator. You have to be an inquisitive attorney sort of like mind, where you're really going for something that is neglected by the market. And in terms of options, you're looking for something that is mispriced, a mispriced opportunity. Okay, so I know Tesla hasn't hit our target yet of $780. Guys, it's going there, okay? Tesla's going to be in the 900s today. There's no doubt about it. And a lot of options that we've been stacking on the put side on Tesla over the course of the last few days, they're going to pay huge, especially going into next week. So find what's not obvious to consensus and find a mispriced opportunity. And I got a great example for you in one particular stock, which is shocking because this one is actually bullish. And it's bullish not just in any sort of sense or measure, but it's bullish because it should be dropping like a rock. And so it pays to pay close attention to stock patterns and behavior in order to identify whether you want to go long or short something. In this particular case, we're talking about Carvana. Carvana actually defies the laws of gravity. This is what it's got going for it right now. The worst earnings report it has ever had in the history of the company. Check. Secondary offering. It's offering another $1 billion of shares. And despite of all this craziness, and despite of the market going lower right now, despite of everything in the red, Carvana is actually going higher. Now, this is not a typical behavior. The consensus is clear, right? If we look at the consensus after the company reports earnings, what do we see? There's not an analyst on Wall Street that is not downgrading the stock. There's not an analyst on Wall Street that is not slashing its target price on Carvana. This guy's slashing it from 160 to 120, from 173 to 121, from 200 to 150. I mean, lowest target price, cuts target price. Everybody's cutting, lowering, and what do we see? If we really are a student of the market, that's what you're supposed to see. Okay, the stock, after reporting all these horrible numbers, lower sales, bigger losses. I mean, this is definitely not something you want to see in the stock of the market right now, but look, it drops immediately after announcing an earnings report. For about 39 minutes, it keeps going lower. The stock goes from like above 90 to $68. Okay, but what is important? Okay, clearly, the initial reaction is sometimes not what you want to be betting on, especially when you're seeing such a crazy run-up. Now, understand, we're not talking about a penny stock here. Carvana is highly owned by institutional investors and trades millions and millions. This is not a penny low float stock. But look what happens next. So it drops to $68. And within 49 minutes, the stock is up 54%. Guys, when you see this, okay, this is a criteria for a move 13. Now, I mean, move 13, generally we keep track of it over a much longer time frame, like over the course of a 24-hour time frame, 48-hour time frame. In this particular case, we're just talking about this pattern of where something goes to a level of $68 and immediately bounces, and it's not a penny stock. All right, in other words, there's millions of dollars going in at that point when the stock hits 68 and it bounces above the actual point where the stock goes into the earnings report. Now, this is bullish as hell. Okay, you have to acknowledge when things like this happen, and this is not the point to actually be short the stock, because anybody that bought options on Carvana yesterday with us, when I send out the messages, guys, you were instantly up, okay, because the stock opens up at like 86. Within 2 hours, it's at 95. So when everybody's expecting the thing to drop. So clearly when you see this behavior, you don't want to be bearish. But let's dig a little bit deeper into this and decipher what's actually going on here. So today the company is announcing the exact pricing for the secondary offer. And so we knew there's going to be a secondary offer, and now it's actually pricing it. It's pricing at $80 a share, and the stock is up. Pre-market, I'm recording this. The thing is at 87 bucks. Guys, I mean, it's up. The stock is up again like 4%. I mean, this should not be happening. The market again is negative today. All the futures pointing to another day lower, another red day in the market today. Again, all the key stocks that could be driving the market higher, including Tesla, they're down. So what's going on? You've got horrible report. The stock drops and then rallies 54% at the lows. You've got a secondary report, guys. In 97% of instances, the stocks, they will drop because now the supply of the shares is actually increasing, which negatively impacts the current stock price. So not the case. This thing is up. So nothing can bring this thing down. And I'm going to bring one example that should make a lot of sense to you if you've been trading for a little while. We're going to talk briefly about LinkedIn. It used to trade on their ticker LNKD years ago before Microsoft actually acquired the company. So you should know this, that LNKD had a stellar history of great earnings report. I remember it, dealing with it when it was 70, 90 bucks a share. And it had a series of great reports once it broke out above the 110 level. So it had some gap ups on the way higher. Great report, moves higher to 180, clears the 200 level, another great report. So LNKD goes all the way to like 270 bucks. And then catches one of the worst reports in company's history. And the stock is immediately down. Like, it's not down. Let me make sure you understand this drone. It's not down from 270 to 190. The stock is down like immediately from like 270, 250 area going into the earning report to like 120. Okay? And the whole world is shocked and everybody's getting the hell out. And guys, guess what happens? In the next like week after that, Microsoft announces it's going to buy the company and the stock is at 190 bucks a share. I think it acquired like around 192 a share. I may be off by a couple of dollars on that number, but that's what happens. Okay, so what we're seeing here in Carvana is, despite of all negativity in the market, right? The stock not so long ago, guys, we're just talking about like 6 months ago. The stock was nearing 400 bucks. Okay, it just touched 68. And based on the buying behavior, okay, based on the chart, okay, I mean, things apparently, they don't think things could get much worse for the company. And maybe there is a buyer. Maybe there is a takeover bid that could be announced that could easily take the stock, in our view, to 130, 140 bucks. I'm not saying it's going to take place today. I'm not saying it's going to take place next week. But somebody is behind this wild move in this particular stock. When you see stuff like this, let me just show you this one more time. Okay, when you see stuff like this, okay, so typically a company can have a bad earnings report, it could drop. When they have a reaction like this, it could bounce a little bit and it keep doing this, right? But this is not ordinary. This is, somebody is behind this move. This is not a typical behavior. Of course, you can say, okay, but somebody was just, maybe they were short the stock from 300s, like we have been. We got the move down to 200s in the stock, okay, and we stopped shorting it. But maybe somebody shorted it at 150, and now they're covering their bets at 68 or 80 bucks right here, and that causes a temporary spike. We're about to find out, but I think something is behind the stock, something is behind this pattern, somebody is behind this buying volume, someone is behind this move in the stock. And the only think that we can attribute this, that the company's getting hit with all these negative type catalysts, and it's still going higher, irrespective of a market that is just on the verge of a drop and continues lower and lower. This thing is extremely strong. So typically when we see this, okay, it's not the time to say, well, the market is dropping, therefore this thing is going to be going lower as well. This is one of these circumstances, okay, where the opportunity is mispriced, okay? So this is what I've been getting from a lot of my students who's like, Leo, but you're saying the market is dropping, everything is crash. You know, isn't this thing is going to crash as well? Well, this thing is moving higher for some internal circumstances that we will find out over the course of the next month or two. There's probably a buyer for the company that will announce a takeover bid on this thing in the next 30 days. We will find out. And that is irrespective of whether the market's going up, down, sideways. It doesn't matter because somebody has made up their mind to accumulate as many shares of Carvana as possible. And they're doing it while the market is highly negative. They're doing it while the stock is getting hit with the worst possible news. Okay, and this is not the time to fight whoever this big whale is behind these incredible behavior in the stock right now. Okay, they have made up their mind to buy this company. It's just a matter of time before we find out. And therefore, this particular stock currently is completely out of place with what the rest of the market is doing. So we could be bearish on a lot of stocks right now. Okay, but we're not bearish on this one. And from the standpoint of mispricing, okay, well, every analyst is slashing their target prices. Every analyst is putting the stock on a sell rate and so on. Yes, this could be the great bull case for the stock because the behavior in the internal buying points to exactly the opposite direction and where this stock could be going in not so distant future. So if you'd like to learn more about the correlations, when they matter, when they disappear, when they appear again, when a stock is correlated to the market and when it's not, guys, visit 13marketmoves.com, 13MTV, watch some educational videos we've got, get in touch with a senior trader, schedule a coaching call, guys. I'll catch you in the next video soon. Let's roll.